Welcome to Market Momentum. Today, we're going to break down all the key action we're seeing across US stocks, precious metals, and of course, crypto. All right, so here's what's on the docket today. We're going to kick things off with this massive melt-up in US stocks, then talk about how you can actually pick funds in this crazy environment. After that, we'll check in on precious metals and see what's happening with crypto. And finally, we'll tie it all together with some key strategies you can use. Okay, first up, let's get right into the biggest story in the US markets right now, this idea of a melt-up. I'm sure you've been hearing this term thrown around a lot, so it's super important to understand what it actually means for your game plan. And this quote, man, it just nails it, doesn't it? It perfectly sets the stage. We're talking about a huge opportunity for sure, but also some pretty serious risk lurking just beneath the surface. So what are we really talking about when we say melt-up? Well, think of it like this. It's a sudden, sharp spike in prices. And it's not always driven by a company's solid fundamentals. Nope. It's often fueled by a flood of investors jumping in because they have a massive fear of missing out. You know, good old FOMO.
This balloon analogy, it's just perfect for explaining the danger here. I mean, while that balloon is getting bigger and bigger, anyone who got in early is feeling pretty great, right? They're seeing awesome gains. But for every new person who jumps in, that risk gets dialed up. Because, eventually, that balloon is gonna pop.
And this isn't just a theory. We're seeing it play out right now in real time. Just look at the S&P 500 and the Nasdaq. They are both blasting into record territory. I mean, the proof of this melt-up is literally right there in the charts for everyone to see. All right, so that brings up a really practical question, right? If you do want to get in on this action, how in the world do you do it strategically? How do you invest without just getting swept away by all the hype? And that is such a critical question, because just chasing whatever's hot can be a huge trap. The real key here is to tune out the noise, look past all the excitement, and use a really specific, disciplined checklist for any fund you're looking at. So here's a super simple 3-step framework you can use. First things first, check the allocation. Make sure the fund is what it says it is. We're talking 95% or more in US stocks. Step 2, watch those fees like a hawk. Anything over 3% is just going to eat away at your returns. And finally, step 3, look at its performance. Does it actually have a history of beating its benchmark, like the S&P 500? If not, why bother? Okay, so stocks are flying high. But what about the traditional safe havens? Let's switch gears and take a look at gold and silver. They've had a monster run themselves, but the big question is, what's the right play now? When it comes to precious metals, the message seems pretty straightforward. That big flashing buy signal has probably faded. The window of opportunity for jumping in fresh has likely closed, at least for now. So if you got in earlier, awesome job. The strategy now is less about buying and more about just holding on. But here's where it gets interesting. There's a subtle difference between gold and silver right now. For both, the advice is basically to hold your position. Don't buy, don't sell. But with silver, there's a feeling it might have a little more gas left in the tank before it slams into that major historical resistance level around 50 bucks an ounce. And I love this analogy. If you come to the end of this train, you don't get on anymore. It just perfectly captures the feeling in the market right now. Trying to chase these assets after they've already had such a huge run, it's like trying to jump onto a speeding train. It's a high-risk move, plain and simple. All right, from old school safe havens to the new school digital world, let's pivot over to crypto. And wow, the signals we're getting from the crypto market are telling a completely different story than what we're seeing in stocks. Yeah, that explosive melt-up energy we see in stocks? It's kind of the opposite in the crypto space right now. The market is definitely showing signs of being tired, of fatigue. And a big reason for that is global liquidity, basically the amount of cash sloshing around the system. It just isn't there to fuel a major new rally in the short term. Okay, so we've covered a lot of ground. Let's pull all of this together into some clear, actionable strategies. What are the key signals you should be watching for across all these different markets? When you look at the big players in crypto, Bitcoin and Ethereum, the key word right now is patience. For Bitcoin, it's struggling at resistance, so you really want to hold off until you see a clean, decisive break above its recent highs. Ethereum, it's actually looking a little stronger, relatively speaking, but the same rule applies. Wait for that breakout to be confirmed before you even think about jumping in. And for both, you absolutely have to have a stop-loss plan in place. That's non-negotiable. So let's wrap this all up in a neat little checklist. For US stocks, yeah, acknowledge the melt up, but you have to be super selective. For US funds, use that simple 3-step test: allocation, fees, and performance. Precious metals, pretty simple. If you're in, hold on tight. If you're not, it's probably best to wait for the next train. And for crypto, patience, patience, patience. Wait for those clear bullish signals. And the one rule that applies to everything? Risk management. Always have your stop-loss strategy figured out before you get in.
And all of this leaves us with one final big question to chew on as you try to navigate this really tricky market. What's the bigger risk here? Is it being left out of the party, or is it being the last one to arrive just before the lights come on? Hey, thanks so much for joining us for this breakdown. We'd love to hear your thoughts on this market, so drop a comment below and let us know what you think. And of course, your subscriptions and likes are always hugely appreciated.